Hey, good afternoon. What is going on? Tuesday, May 20th. Market is closed. Let's talk about it. Saw a little bit of that misinformation again with GameStop. We'll clear the air. I know there was some people that said, hey, I saw those $35 calls on GameStop for January. Were they coming off the table? What about the $50 calls for January 2027? We'll look at that. It appeared to be a short diagonal spread, like just a bullish call. We'll take a look at that. We'll take a look at the option flow because GameStop had about a million, today in net call premium. We saw some of that put premium coming off, and I'd posted earlier about some of that deep in the money puts. I know there's some not misinformation, but I think there's going to be some additional information. So make sure you go check that out on my page there. I had posted it earlier today as well, and I did a video actually about it. I think a couple of weeks ago, just trying to break down that data and kind of what that means with those deep in the money puts. I highly recommend just going back to that. I think it'll make a sense to you, and we'll cover that because, like I said today, I had posted earlier about this when actually what was going on here. We'll pull this up here. It was denoted as a multi-leg transaction. So basically, what happens is the trader's selling the $35 calls for January, and then buying the $50 calls for January 27. So sell the 50s, or pardon me, sell the 35s for January of 2026, and then buy the 50s for January of 2027. So if you look at the volume here and look at the time, you note how they came through at the same time. So, and the same amount of size. So we'll look at the open interest tomorrow to see how these changed in that regard. Because sometimes call options and put options, options in general, they'll trade hands once they're traded. And it was picked up as a potential short diagonal spread bullish call. Could also be just a simple roll, and that the traders sold that position, and then just bought this position. So that's what was transacted there. So the reality is, for the aggregated volume, essentially they sold the 35s for about 1.3 mil in premium, and then bought the 50s for 1.67. So they spent a little bit of money there because they already received some premium for selling the $35 calls. So that's kind of what I was talking about. And these are the type of things that you can see with unusual whales, whether it be flow alerts, seeing it come through in real time, as well as we talked about some of those this morning, or I posted around lunchtime, some of those deep in the money puts coming in as well. You can see 1.8 mil in premium on the $110 puts. And like I said, I had posted earlier, it's actually attached to this, more about what the deep in the money puts are, like explained, kind of a deep dive in a video. So I really recommend you going to check that out. I think it'll help make a little bit more sense here. So let's go over to the chart for a second, then we'll jump into that option flow. A strong day with the close there at GameStop 2851, up about 62 cents, about 2%. Still in line there with that, earnings up, kind of gap up there, still kind of just hanging out. Well above all of its moving averages, especially like the 50 SMA and the 200 on a daily. Those are down. Let's see, the 50 at 25.61 and the 200 SMA at 25.17. I'm looking up there in the top left corner, about well above its 50 and 200-day moving averages, and trading just above its 9-day EMA of 28.07 and the 21-day at 27.43. So pretty solid in that regard with GameStop. Kind of lower volume, but you've seen the play, you've seen the flow. You know where the stock's been, you know where the price has been, but it's solid if you think about it compared to where it's been. The lows there around after earnings and the Bitcoin announcement. That would be something they could add. Still, the stock is way up from where it's been a year ago. So a lot of noise there last year with Roaring Kitty, and just the volume and the volatility. But the stock's been solid. It's just been a nice move. Even from the kind of 50 and 200-day cross there, you got that low 25.66, and you saw 29 last week. So yeah, not a bad move there. Any move back into the 29.30 introduces that gamma like we've always talked about during the videos with the option flow. So that's why some of the big impact for that net call premium was about a million today, and then the net put premium actually negative 4 mil. And we'll look at that. So even though the total daily premium about 24 mil, what was happening is you got some of those deep in the money puts again. The 110s, the 90s, the hundreds. We can look at that here. And then the 50s like we just talked about, and the $35 calls. So those were that roll potential, spread that we just highlighted as well. Yeah, we'll take a look at that though. So these were kind of the larger impacts to today's numbers in regards to the actual option chain. But we'll take a look at that, where the bulk of that money was spent with the GameStop options today. So let's get that pulled up here. We can take a look at it. So what I like to do is sort it by the highest premium, so you can see there. Those were the 50 calls for January and the 35s, just like we talked about in my post. If you want to see what that actually looks like when you're using the platform, for example, you'd see hey, somebody bought $50 calls for January 2027, about $2 million worth. But you see this here, multi-leg. That means chances are it's part of a multi-leg transaction and will come through as such, because all of these option trades are executed on a live exchange. It's not hidden. It's not a dark pool. So as you can see here, it's actually tagged as a multi-leg. So part of a multi-leg order. So the reason is part of the reason why that was a multi-leg is, like we said, it was attached to the $35 calls to where they sold. So see, when you look at it this way, compared to my post just a second ago, where it doesn't factor in the other amount of the $35 calls, like you saw in the screenshot where it was the 2461 size. See here, it just looks like a common roll where they just rolled the position from here to that. So that could be true too. So a couple different ways to look at it, but that's what happened, and it was part of a multi-leg transaction, conducted on the floor. And you can see that when you use unusual whales. And unless you look at it, you won't know. So that's how we see some of that misinformation come through. So, for example, you see on the 19th Friday, we saw some of that sold and then bought back as well. Not bought, but the open interest increased. So, for example, one way to look at that is on Friday, you saw a volume of about 3153. Well, open interest increased today, and then volume 3178. This could also simply be this trader sold these on Friday and then bought them back to close. So we'll look at the open interest, because there's a few different scenarios that can mean. It doesn't change anything. That's just simply a particular trader. You don't know if it was a hedge. It's hard to say what that was. Could that be this? Yes, it could simply be they sold these for 579, thinking they had the move, and then had to buy them back at 611. You never really know. But I believe here, if we look, Fridays was also a multi-leg. So let me see what that was actually. So we got the most accurate information. So we looked there Friday. That was part of a multi-leg as well, where it looked like they sold the 50s and bought the 35s. So same kind of scenario. This was on Monday. So in addition to today, uh, they did this on Monday as well, where they sold the $50 for January and bought the 35s. So same type of scenario that was happening there. So yeah, so just 2 days of that same situation, and that they're selling those 50s. So bought those 50s, sold those. So yeah, and then on the 35s, it'll kind of look like the opposite here if I pull that up. And you look at the 2 day here, you'll see that's the opposite. So it was actually the same. If you look there on Monday, there was 3,200 volume, but the open interest decreased and then more sold off. So could be the same trader, could be the opposite end of the trader, could be the same one from yesterday, could be a different one as well. So don't get caught up too much in that. And then the puts today, those 110s that everybody was talking about, those are deep in the money, and I explained the why behind that. Essentially, if the stock, for example, is 28.51, if you take $110 minus 28.51, the stock, you take the strike minus the stock price, that'll be roughly your premium, which is 82.18. Or if you take 82.18 plus the current stock price, that'll equal the strike of the contract. So the math always checks out. These were, partly multi leg as well. some of that volume on Monday, and then some of that volume again today. So open interest did increase today on these 110s. So, and I explained the why. This could be just short selling, could be arbitrage, could be using deep in the money puts to create basically a synthetic long position. There's a few different scenarios, but like I said, it's important to go back to that post, especially to that video here, as well as this post. There's like the video, and then a really nice post. If you don't like video, you don't have that kind of time, that's fine. I kind of break it down with the math, so it makes sense in that regard. But I highly encourage you to check it out. I think it'll make sense, and that way when you see all these posts where people are like posting on X just to get likes, I think because they don't truthfully know what they're talking about. That's what they're. This is the real information. So, not to downplay or not critiquing anyone per se, but when you post stuff that you don't really know what you're talking about just to, I don't know, get clicks, get likes, whatever you want to call it, it just seems weird. And it doesn't really help anybody, but to each their own. I can't tell you what to post on your X. I could, as I wouldn't want you to tell me what to post, but yeah, I like when people send me a DM like, "Hey, is this misinformation?" or "Hey, I'm glad you shared that. It helped clear it up." That's why I do that. So, some of the others today, we saw the $30 calls for June. Been seeing those. It's kind of like a mix of buyers and sellers. Like open interest has been decreasing the last few days. About 800,000 in premium today, but kind of split, between some buying it here and then selling it, some finally selling. As June, we're getting about a month away from that OPEX of the June OPEX. So, and then the $28 calls for this week saw about half a mil in premium today. Again, buyers and sellers. So it wasn't like, hey, a lot of buyers, hey, a lot of sellers. It was both. A little bit more on the ask side. So would it indicate maybe more buying than selling in that regard? But yeah, they are in the money calls and they do expire this week. Now, next week's a short week because Monday is a holiday. So factor that into your decision as your next expiry for your calls or your puts or whatever you're doing will be the 30th. But next week on the 26th, the market's closed for Memorial Day. So it'll be a short week next week. Let's see what else we saw in there. The 30s for January and then the 65s for January. I think that was the same kind of thing. Some of that was multi-leg transaction. See, I'd have to look at the open interest tomorrow. About 360,000 premium. They're out of the money, deep out of the money. Way out there. $65 calls for January of 2027. So somebody could be selling them, buying them. I wouldn't say buying them per se, but selling them. And the idea they just want to collect some premium. We'll take a look at the open interest. Like I said, I like to look at things about 500,000 or higher, and that's what that's sorted. You can pause or take a screenshot here. Take a look at what the calls, the puts, the strikes, what the expiries were, the volume, the premium. So that's how I got it sorted. We covered the 50s and 35s. We covered the deep in the money puts and the possibilities and the whys. So make sure you check that out. If you're watching this video on YouTube, that's awesome. If you're watching on X, that's awesome. It's available on both. So shout out to everybody that's been watching the videos over there on YouTube. Appreciate that. That's cool to see. So commenting or getting back to you on there as well. So getting used to the videos being on X and on YouTube because some people like the different setup with the format in that regard. So that's really awesome to see. So yeah, that was kind of like where the bulk of that option flow and the money was spent there in regard to GameStop. Today, kind of on the deep in the money puts. Like I said, I encourage you to watch that video and revisit that information. I think it'll make more sense. You could also do a quick Google search about, building synthetic long position using deep in the money put options. So a few different ways you could do it. Watch my video, go to the internet. Tons of resources out there. But yeah, just kind of wanted to talk about that GameStop flow today. What we saw, what we were looking at on the chart, and just kind of, the move. It's still good. I mean, depending on where you're at with the stock. I mean, obviously be careful with the short dated calls. You saw a nice move last week, and then some people got faded toward the end of the week, and that happens. That's why you got to be careful with your weekly out of the money call options. But if we go to the weekly here chart, we're going to flip on that MACD here. We've had that pretty decent cross since the end of April, and then the price just still kind of consolidating up here above all your moving averages, even on the weekly, even on lower volumes. So not too bad. I mean, if you think where the stock was at a year ago, decent. If you think where the stock was at back here at the end of April, $10, it's 28.51. GameStop's got cash, so there you go. It's not bad. People that get upset, I think, are the ones that, get rugged weekly on, out of the money call options, or, they try to over trade the stock or try to complicate the situation. Just watch those posts on X. Be careful of the flow. I just saw some of my screenshots circulating on X as well. Sometimes I'll watermark them with, just some, graphics that I use here and there. But then when I see them reappear on X, like I saw all three of these reappear on X in a post, it's like, well, at least tag me. But cool to see the information being shared and passed around. So if you don't have unusual whales, you can grab it, get yourself a discount, hook yourself up. There you go. Then you can have the access to the data as well. So yeah, just wanted to put that out there about today, what we saw. And like I said, go back and check that out about the those deep in the money puts, where it's more of an intrinsic value, and the why. It's attached to today's post earlier there, so I think it'll make sense to you once you spend some time on it. But yeah, that's what I got for you today. New little GameStop video. Talk about that option flow. Talk about the chart. I know everybody gets excited, makes a few bucks. They like to trade the stock. I know people like to trade it. People like to buy and sell call options. They like to buy and sell puts. I get it. I get it. It's fun. Everyone likes to do what they do. Doesn't matter if it's this stock, that stock, what have you. But nice little move today. Seems to be the move, early in the week, later in the week, and then you see how it plays out. Just be careful with your weekly out of the money call options or any call options in general. Manage your risk. If you see those gains, take your gains. Don't be silly. Don't play games out here with your money. Don't be over leveraged. But that's what I got for you. And hope everyone has a great evening. And we'll see you around the internet real soon, because I'm always around there posting new videos and data and whatever else we can find. So everybody have a good night.